The BRRRR method is the #1 property investing strategy for wealth creation. But to make it work, to make it really fire in a hot and booming property market, you need to make some tweaks. That's what I'm going to explain in this video. Stay tuned. So my name is Ranjan Bhattacharya. I'm a property investor and developer for the last 30 years. You may have seen me on the hit Sky TV show Property Elevator, or you may have attended one of our Central London property networking events. So in this video, we're going to cover 4 things. I'm going to give you a quick recap on what the BRRRR method actually is. Then I'm going to share with you the characteristics you need to look for to tell that you're in a booming and hot market. Then I'm going to share with you why BRRRR has to be applied slightly differently when you're in a heated and booming market. And finally, I'll share with you how you need to adapt and tweak the BRRRR method to make it work in a booming property market. So a quick recap on the BRRRR method. Buy, refurbish, refinance, rent, repeat. Of course, I've done a video on this earlier. I recommend you watch that for a primer on the BRRRR method. So a quick recap then on BRRRR and why it is so magical for wealth creation through real estate. You basically can recycle your cash through multiple property deals and basically keep going forever. And you do this because you buy. You buy a property, you hopefully buy it at below market value. You then add value to that property. You add value to that property by doing something to it. And that's usually refurbishment, renovations, extensions, permitted development, planning developments, that kind of thing. Then, of course, you've uplifted the value of that piece of real estate. And that's the point at which you refinance it. You refinance it, which actually allows you to pull out a lot of your cash because you're refinancing it at the higher value than what you actually purchased it for. Of course, you've rented it out. You've rented it out, producing a cash flow each and every month. And then you're pretty much good to go again onto your next deal, having pulled out a lot of the money that you first put into the property in order to buy it in the first place. Now, that is a very quick summary. Remember, go and watch the full video on BRRRR later. But now I'm going to explain why it needs to be tweaked in a booming and heated market exactly as there is right now. Now, BRRRR is all very well, but when the market is on fire, when it's booming, you have to do things slightly differently. First of all, what are the characteristics of a booming, hot property market? Well, here are signs I look for. You want to keep an eye on the average property price growth. So what's happening with average property prices? We see in the newspapers all the time, we see indices on house prices and how they say on month to month they're rising very, very fast. And that's a real trend right now. The other signs I look for is the time to sell property. Time to sell in weeks. And you get this data, Rightmove, Zoopla, they publish these sort of figures. When you start to see that the time it's taking for properties to sell is coming down from 12 weeks to 10 weeks to 9 weeks, then you know that there is more heat in the market. The other indicator to look out for is the offer to asking price differential. What happens when the market is not booming? People ask a certain amount for a property and they offer a little bit less. What happens in a hot market is that differential squeezes right the way down. And again, both these sort of figures and indicators, you tend to get published by the property portals like Rightmove and Zoopla. So keep an eye out for these sort of indicators to determine whether the property market is on fire. And it is on fire right now. All these indicators are demonstrating that. So what's different about BRRRR in a heated market? Why does it need tweaking? Well, it's this bit that causes us a little bit of a problem, because when the market's not heated, we're looking at buying property below market value from motivated sellers. The problem with a heated market is, you see, when there's so many buyers out there and the time to sell has just squashed, if you like, demand is outstripping supply, then basically sellers ain't motivated enough to accept that much below market value. So that then leaves us with a little problem. You see, the whole BRRRR strategy works because you buy property, and then through the buy, refurbish, rent out process, you're creating equity in the deal. Now, normally when you buy a property, you either have to buy it all cash, or perhaps you have to put down a 25% deposit and the bank gives you 75%. What the BRRRR method allows you to do is create some of that equity that you would normally need to do a deal from the deal itself. And normally you would create that equity by buying below market value and by refurbishing a little bit, carrying out some minor renovations here and there. And a combination of doing both those well gives you equity in the deal, which means that you don't have to leave a deposit, a 25% deposit tied up in the deal when you go to refinance. So that's how BRRRR actually works for you. The problem is, in a heated market, the BMV bit doesn't quite work. We'll get back to the video in just a moment, but what I wanted to really tell you about was what is the most exciting opportunity in property right now, and that is repurposing defunct commercial buildings to residential use. Now, most people don't really know where to start, what to look for, and how to exploit these opportunities, and that's why I've prepared 90 minutes of free training for you to get you started on this wonderful journey. You can register for this free training at property-workshop.com. Join me on that free training, and I'll leave you to enjoy the rest of the video. So how do you make BRRRR work in a heated market? Well, you can't really rely on buying below market value, buying well, to generate your equity in the deals that you do. What you've got to focus on really is creating equity through refurbishment. Now, in a heated market, you're pretty much buying at market value. So just doing new kitchens, bathrooms, a little bit of repainting on a residential property, quite frankly, ain't going to cut it for you. You're not going to create the kind of uplift you need in the projects that you're doing to create the equity to make the BRRRR method work. What is going to cut it is making significant improvement in value of the property that you're buying. Now, in my experience, that involves some element of property development. Now, there are two ways of getting permissions for property development projects. One is through planning permission, and the other is through permitted development. Planning permission is very uncertain, and quite frankly, it's a pain in the butt, and you don't know whether you're going to get it or not. It might take you 2 months, it might take you 2 years, or you might not get it at all. Permitted development, on the other hand, is development activity that you can undertake on a property without having to go through convoluted planning permission. Now, there are permitted development rights that exist for residential property, which pretty much allow you to do certain types of extensions and the like, and there are permitted development opportunities or rights for commercial properties. Now, the thing with commercial properties right now is they give you the most opportunity to create massive equity through refurbishment. Why? Because that allows you to do two things. It allows you to convert commercial real estate into residential real estate. Now, that works because commercial real estate is not valued very highly per square foot compared to residential real estate. So simply convert one to the other gives you that equity uplift. The other thing about commercial property permitted development rights is they allow you to create multiple dwelling units. So out of one commercial property, you can actually create multiple flats out of them. With residential permitted development, there aren't any permitted development rights for residential property which allow you to create multiple dwellings. The minute you start creating multiple dwellings or multiple flats, you tend to create tremendous value in terms of an uplift that you get. So when the market is hot, don't necessarily rely on having to buy your property below market value. Because if you are looking for below market value property from motivated sellers in a heated market like today, then you're going to find those hard to come by. If you want to do BRRRR, if you want to recycle your cash through a deal, you've got to focus on getting the refurbishment right. the refurbishment to get the kind of value uplift you require to pull out all your cash using the BRRRR method and keeping the minimum amount of your money in each deal that you do, you've got to focus on significant value uplift in this refurbishment phase. And in 2021, there's no better game in town than taking commercial buildings and either fully or partially converting them to residential use. Now, I have some special free training on this subject. It's 90 minutes worth of free training. It's a live masterclass, and you can register for your free spot today. I'm going to leave a link in the description below. Join me on that free training. I'll explain the strategy. I'll explain why it's right for today. And I'm sure you'll want to get involved. So join me on that free training and see you guys in the next video.